All right, so let's get started. We're still in mid-August summer markets, but as you know, North Korea 2 weeks ago got us busy. Some terrorist attacks and Trump administration maybe cracking. Those rumors got us nervous, and the markets broke last week. This week, after kind of a directionalist day yesterday, the relief rally has come today where we gap open higher above yesterday's high. I said this in the trading room. We made no attempt to go lower, and then it was a lookout above moment where if you were going to get short and fade the market, you better had a short leash to it throughout because the upside's been the right side. And that's been pretty apparent for the whole session in the first few hours. Now, where does that go from here? I think that once we start going back up, and as we go up, we drift and we grind. You can't just think that the 1.5, 2 million days in volume and the volatility we've had over the last 2 weeks is going to stay throughout August. We could get back into a summer market real quick. Volumes coming in the overnight have been pretty decent before the open, and there's been this uptick in volume only because of those 2 or 3 or 4 kind of fundamental stories that have hit the market and become all headwinds at the same time that drove us south 2 weeks ago. We re-rallied that last Monday, and then they hit it lower again late last week, and now we're taking some of that back. It has created more volatility and opportunity. What I want to tell you guys, though, is that when you get into a market that's still moving only slower, it still could be dangerous if you're adding, if you're not getting out, if you're fighting some sort of trend. I call it a slow-moving train. Freight train will still run you over and kill you, just a lot slower than a fast one. Better off getting hit fast, getting in, get out. Don't add. That's a really hard thing not to do, but a very important thing not to do. So these edge zones, I talked about them and rolled out some more detail about them in the workshop a few weeks ago. They finally have been updated to the Market Delta platform. So if you have Market Delta, if you're on integrated client with CQG, you got to go to their website, and they're about a week or so out before they're up their next update. But if you're on Market Delta CQG, you're going to have the opportunity to have them as of now. After this, go to Market Delta's website to their download page and download the latest version. That's going to have and allow you access. For today's purposes, I'm just going to go over some of the settings and also give people a sense that the way I use these edge zones, the way that we eventually collaborate and use them to the best of their abilities are going to be not everything I share with you guys I'm going to share with the rest of the world or even in the trading room. There are things that I'll talk about and be more unambiguous in here than I will be in the room and than I will be in any kind of public webinars, because there's a lot of ways to filter these lines so you don't have too many or too few. There's a lot of ways and updates to this feature that I'm working on getting added. When I say about updates or when I say about filtering and everything, I'll get into that in a moment. I'll also share only to Edge guys, which is obviously everyone here, you wouldn't be here, my templates with the way that I've tweaked them. Now, I've sat for many days and nights at my desk really playing with these a lot, and to the point where I had to go get a massage yesterday because my neck was killing me. And every time she said, "Is that too hard?" It was, and I told her that it wasn't, trying to be manly. She almost made me cry. So that aside, let's just get into real-time support resistance. That's what's powerful about these, because they update real-time. Not every level, obviously, is something that happened today or was created today, but the new ones start to update. Essentially, what these edge zones are thin spots that get filtered. All right? So I don't have a bunch of slides set up with how to go real deep into this stuff. That's not my plan for today's session. There's going to be plenty of time in these Tuesday sessions to do that. Just want to get people who have Market Delta rolled out to getting the latest update and then getting access to them so they show up on your screens. So let's go to the charts. I Did I leave that order in the book? No. Shoot, might have been filled. See, this is tough for me because you see all these greens coming in. It's just indicative that the buyers just keep coming back and they're going to push. But this 47 3/4 and 48 half two edge zones are holding for rotational selling. I wish I was long to cover. It'd be great if you're comfortable selling a long than selling a get short, because it's a trend day. So you got to be really careful. Yeah, this is a target. We're going to go to 49.5 and maybe 51.5. But look at this trajectory, just sideways to higher. And here's the real-time value of these levels. Is this wasn't obviously a level before the day started. This wasn't a level before the day started. These weren't levels before the day started, but they real time, they come in. And you could see how the market will respect them, especially on trend days. People always want to, how do I get on a trend? These are opportunities or better visuals, right? And the fact that they work as resistance as well. I don't want to get into the uses of it. I want to get into right now getting people with access to it to be able to play with it. So just follow along. I don't like doing these sessions because not everybody in here is a market delta user, but I want to get into a couple things. Once you get this loaded, the key is that it's only going to be right now working on a footprint. So you have to have a footprint chart loaded. And if I go to just, let me do this from here. Let me get rid of it first. All that goes away. If you go to just a basic blank footprint, this is obviously what it looks like. Right click into the footprint and modify FP is where you're going to start, and you left click that. So inside these study parameters, highlighted is going to be where this is accessed. The imbalance number here is where the greens and reds are going to show up like they normally have with the imbalances, right? When you go to highlight and left click it, you get this empty field. You go over to the left-hand column, and buy imbalance, you want to throw it over, and sell imbalance, you want to throw it over, all right? The threshold number, 400, is what's the criteria for an imbalance number? For these greens and reds that are already on the chart, it was 500, right? So you could change that. Let's just leave it for 400. Now, I already have the colors dark green and dark red. That, to me, shows up better for visuals. Don't get bright colors, get darker reds and darker greens, all right? The other thing is hollow. If you have this checked, you're not going to get the line to shoot across. So uncheck them. The shades and the step is kind of cool. I'm not using it yet. If you think that you'll like it, by all means, I'm encouraging people to go and look at it. The shades are, you could have different depth of color based on the size of the imbalance, all right? And if you went and you wanted to have 2 shades, it's going to show you bigger and less bigger imbalances. And the step means what parameters that you would have. For instance, every 100 or every 200, every 500, the shade would change. I'm not using that yet, and I might, but I haven't gotten there. I don't want too much stuff on there. I'm not diminishing it all, but that is available in the out of the box of it. This is important. Look back. How many bars back, that's what this number indicates, are you going to show this criteria so they come across? 3,000, you can go far back as you want. You want to make sure that you're seeing all the ones that are still fresh. So 3,000 has covered it for me. If we ever get down to an area where we haven't been to in a real long time, you might have to up this. So if you're not seeing any below us, way below us or something, it's probably because you haven't looked back far enough. And that's where that feature in here will come into play. Now, after you set all that, you look and you say, okay, I'll go to 400% threshold. That's what this is. More. What is that? This is key. Left click it. Threshold's going to say 400. Min diff, that means you want the total to be at or above a certain number. So if you get, just think about this for a second. If you had an imbalance of one contract by 4, that technically meets the threshold of 400%, right? But it wouldn't meet the min diff of 350 because 4 by 1 equals 5. So you wouldn't have all those instances of light volume imbalances show up. There's where the min diff comes into play. I throw in a pretty big number, I believe, of 800. And when you set it for the buy, you probably want to set it for the sell, the reds. Same thing. Come in here, change it to 800, clicking OK and apply will now give us these reds and green lines. Wham, there they are. Now, a couple things that you want to look at when you're watching these. What makes them stop? Meaning what cuts them off? For instance, right in here. We'll start with a red one. A red one will stop if a bar goes above it and closes above it. It'll stop at the bar that breached it. Red closes above, stops it. Green, just the opposite. Let's find a green that closed. Well, this was a short one that closed. It came in, went down, bar closed below it, and the green stopped. You see how it penetrates the green, but it doesn't close below it, so it keeps this green intact. Make sense? And that's for whatever periodicity you have. The charts are able to read when the market closes below it, whether it's a 5-minute footprint or in this case a 4 P&F. This market or bar closes above this red, so they stop from going across. If not, they go all the way across to the price pane. One thing that's important without getting too deep for this session, look at those 48 quarters, would you? One thing that for the purpose of this session is, as we know, with all the edge concepts you've gotten throughout your studies here, that a level's not going to work forever. So you got to know, did this work already? And add or sprinkle a little context to a level. So it works a little bit as the overnight high in here, comes off, follow my cursor, comes back up. A couple rotations, it works on this short one. But this one came back, rotates below it, and then this was the after the open move that we had. You got to add a little context. Gap open higher, market's a little bullish. If you want to sell these levels, you better keep a short leash on them or not be surprised when they take them out, right? So even when you have levels, if they're good, they work great when they don't work. Oftentimes you're seeing, this is a topic for a whole nother meeting, but when they eventually break out, it really shows you subsequent support. When resistance gets broken, old resistance becomes new support, or at least you say, I got to put my damn horns on, because it took it out without any problem. We weren't that surprised. We were kind of anticipating the breakout above 34.5 way back in here from this consolidation. This is today, by the way. And then you go. This is not something that works some of the time. It works all the time. No, I'm just joking. It does have a really nice high probability of it working. So you see this 48 half, 48.75 came in. It was a double stacked imbalance. It's worked and it's come in and out a few times now. You see that? I wanted to sell in the middle of these two. My filter is slightly different from the example I just gave than from this chart. I just tabbed over. This is just a single imbalance that came over. So, and then if I go to this one, there's two of them that came in from a while ago. You say, well, why is that? Well, let's check the criteria for this one. If we right click the footprint, go into modify FP, go into highlight, forget about the volume delta for a second. Buy imbalance, sell imbalance is what we want to see. First of all, my threshold is for 600%. So that's different. and my min diff is 800. That's the same. Threshold though is 600. That's where the difference is. So if I change that threshold to 400 on both the buy and the sell, you'll see a double stack come back in. You'll just see more instances because I'm lowering the threshold or filter. That's for a lot of the collaborative efforts that are going to be made in the team room and with each other. I've been doing it a little bit with a couple guys that I've showed this to early and picked off that came to the workshop to help me collaborate. But I've been doing a lot of it with myself, just sitting down in here, both at my office and my home office. I spend many more hours at my office. My wife's going to think I have a girlfriend. I mean, that's the time I've been spending with this stuff, and I like it. And there's a lot of even deeper criteria that I'm going to show you on different time frames as we move along weeks to weeks. I don't want to just spill over or spill out all in 1 or 2 sessions. Hey guys, this is everything I've come up with, because that's just premature, and there's work I'm doing on that stuff. So it would be kind of premature to do that. Let me go back though to my original threshold of 500, or what did I say, 600. I'm going to say it's 600 for now on this one. What's really important is what I want people to do first of all is how many people in here have market delta? Put a Y in the box. So the first step is to go and download the latest version on marketdelta.com. That could be found let's do this 4 more times here. If you go to Market Delta's website, this is the home page. You go to what is it? Solutions? No. Resources, downloads, and that's the page that'll have the latest version. All right. You click the green, the download button. So that's where you'll find it on the MD website, MD.com. Not on the Edge website, Market Delta website. Not on the Edge website, Market Delta's website. Now you could see this coming in. If I did sell these things, listen, I'm telling you, I had this offered at 48.25 before I opened the room, and I was willing to carry the position, even doing the room, and I pulled it because I didn't get filled on this move in here, and it would have been 1 tick off the high. What would I have done? I probably would have covered a third of it ahead of this green bar, a third of it right now, and the rest of it in this double green. I'm not in the damn thing. It's a mistrade. Shame on me. Paul, CQG with MD, it's a week or so. And that update will be found on CQG website, okay? But however, the pack I give you once it's on CQG side will work. The templates will populate into your software. So if you guys then want some of the settings that I have in here, I'm going to share them with only Edge guys. It's going to be password protected. I would only encourage you to share it with other people that are other Edge guys, right? I don't think anybody would share it with anyone else anyways. If you're on a different platform, you know me to be an honest guy. I don't care if you come over the Market Delta. Whatever is best for you, don't jump and come over to MD right away necessarily or get anxious about it. Think it through. If whatever platform you're using is better for you, then stay with it. I want what's best for you, not what's best for a platform or another company, to be honest. So that's just my take on that. Um, there are some software, there are some other platforms that have elements of these edge zones. The difference with mine compared to them is how to filter them and how to trade them and all the different other qualifying techniques we use to have them. The one thing I press is that I don't want people going to a platform that doesn't have them and say, hey, could you put this in? And I think you guys understand that pretty well. No, Bernardo, you don't. If you download the latest version, my current pages and charts still appear. Yeah, they'll still appear. Everything will be fine. You don't have to save your pages and then come back. To those that want um, these what I will share are these 6 charts. Now you only see 4, but there's also one of the yen and one of the bonds that I have. Here's the bonds, and then there's a yen chart. Make it easy for you guys to just pull this stuff up. And then in each chart, remember, there's several tabs that I'm going to strip out some of them and put in others, not to hold anything back, but some of it's overkill, and I don't, it's not really necessary to run through this. One thing that I remembered while I have this up, and you guys will come to this kind of conclusion, is on a 12 PNF. After it works once, generally if it works twice, it's not going to work the third time. Generally, they're one and done. Generally, all right. So you could see this up bar on a 12 PNF. They come back down. They do hold these greens. I mean, it does come back a couple points below this one, but right on this one, they rally back up. But you see these reds on the rotation. From a rotational standpoint, they come up, they stop, they come back down, they stop. It's probably not going to stop the third time on the 12. It does what it did, right? That's why you got to kind of be aware of what happens. Now here, on a 12, this thing looks like it slides right through it. Well, it does on a 12, but I can guarantee you that if you tried to play this 12 on a 4 PNF, it gave you a lot of time to get the hell out, if knowing that you're wrong. I mean, look at this. There's over almost 100,000 contracts that traded in that 42 even area, and that's why this is 42 half. Let's go take a look at today when it came up to 42 half, and that's what's cool, is that 42 half was right here. We also had a couple red lines, edge zones for on a 4 PNF. Look at it, it came 42 half would have been right here, right? It was a 12, and it's also on a 4. Look how many times it stopped it before it finally ran through it. So on a 12, it looks like it goes right through, and for all intents and purposes, it did. But look at all the efforts it made to hold it, so you don't get your face ripped off if you're playing it, and you actually get paid. I mean, it does break a couple points off of 42 half. Comes up, breaks 2 or 3 points. Comes up, breaks a point and a half. Comes up, breaks a point and a half. Comes up, breaks 4 ticks. Then this. Like if you continue to play 42 half, after all these rotations up in here, you continue to play it in here, you probably got holes in your head. No offense. I might have even done it. Anyhow, understand the rotations of them. All right. The other thing that's good practice when you first get them is on CQG and Market Delta, they've got this cool tool that if you highlight the chart has to be highlighted. You're going to right click. I'm not going to right click that. Make sure the chart's highlighted. You're going to right click setup. Right click setup, not left click. Right click setup. This drop down comes in. Training mode is what you want. Then this little toolbar comes in. This toolbar is cool because, let's open up the chart, it remains here, because if you go to start, it takes you back so many hours. You hit start again, takes you back again. So you hit start a couple times, a few times and you don't know where the hell it takes you. So now you're like, all right, I don't remember what happened here. You don't look at the date. You're just back. And then you just walk yourself through it and say, hey, this green should probably hold until it doesn't. And what's cool is you hit next bar and it takes you one bar at a time. And you're like, then all you have to do is hit the space bar and it takes you one bar at a time. And if you hit shift space bar, it'll take you back. But you could say, okay, this red here held, it goes through it. This should be now support. Doesn't even come back down for support. We should get up into this red up in here. Click on the chart. Makes you do that. Gets into this red, pulls back. Gets through this red, goes to the next one, should pull back. It does. We knew the market was strong back in here when it got through it. Should hold this green, and it does. Should he stop at this red? It doesn't. Bullish should stop at this red. It does. Comes back down, should stop at this green. It does. Maybe it'll chop around between the red and the green, and it does. And so now when you're doing this, you're stripping out randomness a little bit, and you're giving yourself confidence that these levels are not coincidental. They're not just, as long as you filter them down, obviously, they're not random. They work. The whole criteria of them working is the assumptions, the accurate assumptions of people getting trapped because of the speed at which it's calculating that throws in a level. But just to understand, yeah, and you go back, you guys that might have missed the first part of today's meeting, it will be on the recording, some of where the reds and greens come from. Just remember that the origin of them are from previous thin spots. And we know from past education that thin spots is where the tempo of the market picks up. All right? And so you double click this, it takes you could close out of this at any time, and takes you to real time when you double click on your chart. It's no coincidence that this market is resting into here. Again, this is just going to give you better visuals as to why thin spots are so important, and when they get breached, how the bar will stop. Before I go on, because I want to talk about one other thing that doesn't have a lot to do with these edge zones. This isn't the only meeting we're going to have on edge zones, all right? It's just an introductory to it. The fact that Market Delta just had it released. Again, go to their download page. It's on marketdelta.com, not the edge site, marketdelta.com. Then I want people to email me at edge. So edge, what the hell is the email now? Edge@marketdelta.com. Edge@marketdelta.com. Requesting, just say I'm an Edge member and I'm requesting Anthony's template for the edge zones. And I'll respond within the next day or two with those. I'm not going to get them out today, but you'll have them tomorrow at some point. But send an email, edge@marketdelta.com, and just said, I'm looking for Anthony's edge zone template. I'll make sure, well, you're obviously going to be an Edge member, or you wouldn't have heard that and you wouldn't be here. Before I go on, what questions do we have? Because, Mark, why not send them to all Edge members? Because I'm not going to get into bothering people that don't have any effort, make any effort to want them. People want them, they'll send a simple email. Here's my thing. I'm not a guy that's going to wake someone up to say, hey, you want these? And shake them. You want these? Come on, take these. People want them, they'll ask me for them. If they don't, they won't. That simple. I'm not talking people into getting them is my point. Setting on the 12 PNF the same. Great question, Mike. No, they're not. So on a higher periodicity, the rule of thumb is a smaller imbalance. All right. And what is it? This 12 I was playing with, and I've got different imbalances. Smaller imbalance and a higher min diff. I didn't plan on getting into this as part of this session or to have some charts ready, but like on a daily, if you have a daily footprint, all right, let this load a second. And your min diff is too low, you're going to get too many lines. Because on a daily footprint, you're going to have big volume, right? But with that being said, you want your imbalance to be lower. So let me click modify. Just think, the higher the periodicity, the time frame, oftentimes the lower the imbalance, which would actually be in here. 200 is my imbalance. Remember the difference here real quick. This imbalance percentage takes care of all of these, the greens and the reds. Not necessarily after you go into highlight. The threshold that'll get met for the edge zones will be in here. So I went to 200 for a daily and then a min diff of 2,500. You got to go down on the threshold and up on the min diff. Down on the threshold, up on the min diff. But that's a great question. Even George says, awesome question. Should we give Mike something for that question? He is a former truck driver. Maybe we'll give him one of those pair of dice you could hang by your rearview mirror. What do you think? Shorts where? Are you talking about right now? I don't understand the context of this question here. One thing I want you to remember, when you're looking at a daily chart and it looks like the level doesn't work, chances are it did in a smaller time frame when you're actually going to play it. It gave you time to get out, all right? And maybe even make money on it. Because remember, a daily isn't just going straight down. It's rotating like crazy all the way up and down it, correct? So know that when you're looking at a higher time frame charts for any levels. For any levels. But you could see how it calls the two daily highs on those days. Calls the daily low here and here, here. We scrambled through all these because it was, remember that huge move that we had? Everybody was probably short through here. Big move that we had in North Korea. But these are dailies, all right? These are daily sessions. Yes, I would definitely. So a question of when the market's rallying, would you take a short? Yes, but you got to understand that when the market rallies, doesn't mean the same thing. Just because the market rallies doesn't mean the market isn't fadeable, but a rally isn't the same thing in a vacuum. So a rally today is different than maybe a rally yesterday, because yesterday was more rotational and weaker. Today is strong, and we knew that we knew that on the open just based on we were going to open up strong, not only above yesterday's close but above yesterday's high. You could take shorts at these levels, but you just keep a tighter ass leash on them. That's all. Look at this though, George. 48 quarter. How'd it got filled? Honestly, I'd be out of the whole thing on this move and this double stack because we're going to probably rotate a little bit out of here and come to 47 even. That's what's going to happen. I'm draining this double stack and come out. Oh well. So yesterday I had let me see here. You can see all my tabs across. This is all the different ways I was filtering it down and everything. Your homework is going to be a lot easier, or your preparation, because and more efficient, because you don't have to maybe scoot back and you go over multiple time frames for that. Good question by Bernardo. Could I explain a bit about the min diff? It's the best way I could explain it is the first of all, the higher the min diff, the less lines you're going to have. So the way I was explained is it's the sum of the two numbers that are used to create the imbalance. For instance, the two numbers used to create this imbalance, see it up here, are 1802 and 134. Well, that net's almost 2000. Is that above the min difference? Yes, because the min diff is 1800. What it does is it eliminates having smaller volume imbalances from throwing lines across. Imbalances that have bigger volume. Does that answer your question? Took me a few explanations to understand it too. Again, so if you want, after you do the download first, because this feature is not going to work unless you download to the latest version, which is on Market Delta's website. Email me because you want them, and I'll reply with the pack. Again, and I think it was a great question by Mark, or idea, like why wouldn't you just email it to everyone? Because it's always been an important part for me, is I am not forcing people to be successful. I'm not like, hey, pay attention, wake them up. I got to wake someone up. They're not as interested as they should be. Why should I? Right? We got to take a little bit of effort, say I want them or I want them. If not, no problem. I want to bother you. In other words, I'm not going to bother you to get you successful. I guess that's my point. No, Dale, go to the MD website. You'd be good. I don't, Mike, not right now. I will real quick. The volume setting that I have in here is for absorption. It's also under highlight, and what I have is greater than 800, less than minus 800. Write that down. I don't want to spend any more time on that than I have to at this point. Better wear your glasses, Mark. All right. right? Not different ways of looking at the long up down bars, different ways. This is what I was going to move into after I covered this. Know where you're at. I'm talking about this because it's helped me. Know where you're at on a bar. So quickly, if someone were to ask you, are you long in an up bar or are you long in a down bar? You should know that. If you're going to truly buy, just look at my illustrations for a second and not the chart. If you're going to, this is the market moving up. This is the market retracing, right? Are you buying in a retracement or are you buying on the way back up? I'm not saying one is better than the other, but what is your setup call for? If you want to buy a retracement and you're buying it in that bar, well, then you might be reaching and just understand it. And just know it. Because there was I think it was late last week or early this week, I think it was last week, where just for example's sake, if we go up here, I'd want to get long for a few different reasons, and I'd miss trying to buy it here, and I'd be buying it here, and I'm like, why am I buying it at an up bar? Might work, but I'm reaching. Just think of it. When you reach, your fingertips are vulnerable, or your arm is vulnerable. I got shoulder issues. My shoulders have dislocated in the past, and when they're most vulnerable, when my shoulders are when I'm reaching, right? Makes sense. Same thing in the market. Your trades and positions are more vulnerable when you reach than if you let the market come to you. In most cases, it's okay to sometimes reach. At least know it though. Is the point. Are you long in a down bar? So if you wanted to get long today, you'd been much better off, and in any up day, and in most any up moves, making sure that you're long in a down bar than reaching in an up bar. And the reason is, and sure, down bar could keep going against you, and you have to wear it, and it sucks. That's going to happen too. But if you think about it with a market, it's like a rubber band. It's only going to stretch so much oftentimes. So it stretches out to here, and it's got to retreat and contract down into here. So if you get long down here, as opposed to having to wait to get long up here, I mean, if you're wrong in here, then a rubber band's got to stretch a little bit more. How much are you going to get killed for? But if you're wrong in here, the rubber band could stretch a lot longer, right? Because you reached. It'll be helpful to make sure you're aware if you're buying pullbacks like you're supposed to. If you're supposed to play pullbacks, know if you're in a down bar on that point and figure. If you're not trading well, you'll notice you'll be long in up bars and short in down bars. And the market's not. That's different if it's real fast and super volatile. Oftentimes, that's when you want to get long. Breakout, breakout, breakout. Very few moments and days and sequences are that fast. In the general ebb and flow of the market, you want to be long up bars. Long down bars, short up bars, because now you're playing healthy retracements and at least knowing them. Now look at this thing. Yeah, it gets through here because it wanted to go to this double balance or double stack edge zone. Came out of this, came to this one, came back up. You could say, well, this one didn't work. Yeah, it did. Already came in, rotated, stopped there. This one rotated up, stopped there before it moved up. These two, they worked, but they're double. Chances are they were going to work again. It's done exactly what I said. Come down, probably come in here where it did blast through here, and then come back down. Probably chop around. That's a missed trade. And I always say, you got to pretend like you caught trades. You got to separate them out. and can't pretend like every winning trade you missed. I wanted to take a shot in between this level and this level. And if I was wrong, I wasn't going to have to get killed, in my opinion, because I'd probably bought it 3 or 4 ticks higher. Would have been my worst case scenario. If I was right, I had a 3 points on the last third in it, based on where it could magnet and go back down into. There's a lot of great things we'll do with these edge zones. We'll throw them up against delta profile, which are slightly different than what creates an edge zone, but same concept, different periodicities, different min differences, different markets, trying to find confluence between good support on an edge zone in both the ES and the NASDAQ. How do we get on the trend faster? I don't have a scientific reason other than wait for a breakout. Wait for the first upside breakout. And then look for buying pullbacks. And remember, you're trading the NASDAQ. So that's a market that's, the price of poker in the NASDAQ has went way up in the recent months with how volatile it's gotten and stayed. $5 a tick adds up in a hurry, especially if you trade multiple contracts. The other thing that brings me is with these edge zones is they're only one tick wide. So when you look at them, most people for levels that they have a support and resistance out there are what? Several ticks wide. Gives them a lot of room for error. This is 1 tick wide. But going back to, are you long? Are you long an up bar or a down bar? Is a good question to ask yourself before and then after you get in. Another way to get on the trend faster is, you expect this morning there was a chance for a trend higher because we gapped up higher in the first 10 minutes. We couldn't go lower. You're anticipating the trend. So you have to buy the pullback modes. I don't think we're out of the woods with North Korea, just to give you guys some more macro analysis. I think that could always return as a problem. We obviously have a relief rally that took place last week from it. Great. I don't think it's over like that necessarily. So always stand on guard for something like that to come back in and roil the markets. Not rally, roil the markets. The other thing is tax reform. Is it going to be a rocky path to it? That could create a lot of different opportunity with tape bombs and comments and votes and things like that as we move ourselves out of the summer and into the fall. So keep your powder dry. Don't get beat up too much, and there'll be some opportunities, in my opinion, with some real good moves based on whether or not that passes. If it passes, it's bullish still. If it doesn't pass, or there's a chance that it doesn't pass, it's pretty damn bearish. What would be the best for trading is it goes back and forth. They got the votes, they don't have the votes, they'll have to do this. That'll be a good directional trade. So just to recap, MarketDelta.com for the latest download. First, second, email me if you want my templates to them, edge@marketdelta.com. Third, know if you are long in an up or down bar on a point and figure. Assuming most people are using point and figures, are you long on a down bar and you wanted to buy a retracement? Good. If you want to buy a retracement and you're long on an up bar, not so good. But you're getting a better sense of these pullbacks, or knowing if you're involved in a downside pullback and you want to get long rather than being long this bar. If you're long this bar, you're in a better location, not just after we're seeing it, but just based on market structure and how you know markets move. Even though this is in a bad location in the grand scheme of things, it's harder to stay on the damn team buying in an up bar than if you just buy in down bars, because you get a little head start. Chance maybe to cover. Take some profit. I really think you guys are going to enjoy these edge zones. They're not going to hurt anyone's trading. They can only help. That's the way my overall feeling is. Never to get too optimistic with anything, because there is no holy grail. But anytime you could say this isn't going to hurt, this can only help, it's something that's good. And that's what these are. You have a platform that doesn't have these, don't worry about it. If you're trading well and if you really feel the platform you're on is better for you, by all means, stay with it. You'll never hear me talking someone out of a platform to come to MD or vice versa. Nor will you ever get me to go to your house, knock on your door, just to ask if you want a template to my charts. Is that what you want me to do, Mark? You want me to fly out to Colorado and say, hey, Mark, please, let me give you the template to my charts, please? What will it take for me to give you my charts? Take them, please. Also, some things that I don't have any control over. So I shouldn't say I don't have any control. I have small influence, but not control. Is trying to add some things, criteria, to these edge zones additionally than what they have out of the box. What does that mean? See, this thing has crept up even a little longer than I thought. It won't blast through here. It'll rotate, probably chop between this green and these reds. I would have thought that it stopped here. Come back off. For example, like just showing double stack areas. So consecutive greens over here, if they show up, those are the only ones that would come across. Why? Because they were consecutive prices. So these two, so you'd only see them in pairs or above. That's it. Make sense? You only see double or triple stacks. They have to have them in consecutive prices on the same bar. So the only red ones that would show up, and because there's high probabilities of, would be this one, right? Because they happened most likely in a consecutive price, and you see how well it works before they don't. The singles would never show up. This would not show up because it's not consecutive green. These probably would show up. No, they wouldn't. They're not consecutive. Not consecutive. Well, I'm not going to go back and show you. You get the idea. That's not in this yet. It's not in this update. There's other cool things like also trying. There's a lot of notes I've taken on some updates. I don't want to get into all of them because, hey, if some don't happen, I don't want people all excited. One thing was if one bar takes out a level, okay? If one bar takes out a level, you see this in the NASDAQ a lot. Here, just happened. When one bar finally takes out a level by X amount of ticks, a red line will come across. Old support, new resistance. So you would have had a red line come across in here. See how well it worked? Until it didn't. If it breaks it by a lot, you know what I mean? If it breaks it by a lot, here, another one. See how it breaks it by a lot? And you'd set this criteria. So if a red bar gets broke by, let's say, 3 handles in the same bar and closes 3 handles above it, that red bar turns into a green bar. Old resistance, be new support. Another one would be confluence correlation. So the only red and green bars that appear in the ES are the ones that happened at the same time or within 30 seconds, for instance, of the NASDAQ. So if you got a green bar in the ES, you must have had one in that same sequence in an ancillary. Isn't that cool? Even though this top line has worked, it was a double stack on this filter. It's already worked. I still think it'll come back up. I was a little surprised it got through this red, but it is a bullish day. That's why if you sold it here the first time, you should be all out. On a 4-point move in your favor, you don't take profits. On a fade, on an uptrend, you'd be crazy. So now it comes all the way back. I don't think it blasts all the way through here. Maybe it'll come back down. But now the meat on the bone isn't all the way into these greens. It's only about halfway down to 47.5. Don't be pissed that if you missed it this time, you missed the winner, catch the loser. That bothers you. You shouldn't have done it. Now it's almost too late because it's already rotated back down. You get to a point where once you get these levels set, you'll say to yourself, you can't make this stuff up. The other thing about good levels is you want them to come back to the concept of what? Stuck traders that create them. So these are all about where the tempo picks up, which it's accurate to assume when the tempo picks up to the upside real fast, people miss buying it. When it picks up to the downside real fast, people miss selling, right? Therefore, stuck longs above, stuck shorts below. That's why just because a lot of people will know about these levels doesn't mean that they won't work. Because if they're going to work, it's because the concept of stuck longs above, stuck shorts below exists in any support or resistance. So just because more people are playing it doesn't mean they won't work. You'd have to have a lot of people. It always brings me back to when you have something good, too many people find out about it's not good. It brings me back to my prop firm when we were just 20 or 30 guys, and we started hiring more. We thought we'd make less money because more people would be trading the same stuff and same kind of similar way and everything. It was just the opposite. The more people trading, the more money there was to be made. Market's much, much bigger than edge zones. Plus, the way to filter them is where your edge is going to really be. And like I said, while I'm sharing the edge zones with the masses, I'm not sharing all the filter criteria with the masses. We just drill that down into us. I do recommend and encourage people within the team room share with each other, because even if that room gets real big, isn't going to matter, because that's a real strong example of my prop firm. You're not gonna get unless you give. So this sell of 48 quarter won't be as profitable as this one. This one will come back down probably in the 47 even, not down to 45. Again, my opinion. You could see these in crude oil, how well they work. And here's a great example of the upside in crude. Thrown in an imbalance, comes down once, comes down twice, stops it. The red stopped it there. These reds, in a way, stopped it here. These are only 1 penny wide, remember. Comes all the way back down. Where does it stop for a 15-cent rally? Back down on this green. These reds were just put in again in real time. That's why it held in this 90 to 98 area as resistance. You could see how well this didn't work and what happens. Change direction. This red comes in, down. Where does it go down to? This green, 58. This is a big sell-off we had around 9 o'clock. Stops almost on a dime at 58, rallies. Doesn't stop on a dime. I sold it up here twice and made chicken shit when it should have had more on it. But I couldn't. It just, look at all the volume it spit out here. 11, like 76 where I got in, 76 and 78. And did not keep it all the way down to a 15-cent break. But was it worth the risk? I made money on it, but it wasn't worth the risk in the time. But I sold it up against these reds, that's all. And it worked. I just didn't give it time. I didn't have a good exit if I was wrong. That was part of the problem. Actually worked again in here, chopping sideways. Takes out this green, goes to this green, stops, rallies. Comes back down to this green, chops, rallies. Up to this red, stops it, breaks them. Breaks this green, comes back up to this red, stops, breaks them. It's gonna work. This red's gonna work at some point. It does. Down to the green, up to the reds, down. Finally breaks this one, comes up. It'll stop here and go to this green. Now you're making calls that are a little bit more with probabilities instead of random. Again, the tagline, real-time support resistance. We'll see you guys in the team room later, the trading room tomorrow, or the edge meeting next week. But you guys know what to do. We'll go in more and more detail with this, even bring on other guys that want to share some of the filtering they've done, some of the work that they've had behind it. You guys will like it. Keep working hard at it, and you'll get it kind of drilled down to what you want to do. It'll help the biggest weakness of all of us, and that is execution, doing what you want to do instead of missing what you want to do a lot. When you're trading like crap, you miss. You don't do what you want to do. It's that simple. You don't do what you want to do. It's not instinctive anymore. It's not reaction. There's too much thought involved. This will help with that. All right. I'll record, post this up within the next few hours. You know what to do. Download it if you're a Market Delta user, and then reach out to me, edge at marketdelta.com. Within the next day or two, you'll get the template.